Hi, I'm Victor. I'm an individual investor and I invest in Ford stock. It's part of a portfolio that I manage and invest time analyzing. And I like recording videos to show my analysis and share it with other YouTubers, as I've learned a tremendous amount from other investors online. Today's company is Ford. It's the big automotive company that's really doing a lot of things right. I'd like to analyze their earnings. They were just released today, go through a process that I like to go through and determine if I should buy more shares, hold my shares, or sell out of a position with Ford. Let's take a closer look. I like to scorecard my investments, and it involves 4 questions followed by one action item. First, do I want to be in the industry? Is the company operating and performing well? Is the balance sheet in good shape and less than 3 times EBITDA? And I want a discount on the stock. That way I could expect my investment to go up in value. Based on the answers to those questions, I decide, should I buy more shares, hold, or sell this particular stock? So Ford released their financial statements as part of their earnings release. And I'm going to look at the income statement, balance sheet, and statement of cash flow, starting with the income statement. First, the top line grew. So they grew their revenue. That's always good to see, especially in the environment we've been in for the last 2 years with supply chain issues and so forth. So really good top line growth. Their cost did go up though. It'd be nice to see them reduce their cost. It's a little too high, and that's what led to them being unprofitable this year. They did have a net loss on an investment, which is not part of their operations, but it was a net loss in investments. On their balance sheet, they have a very good level of cash or cash equivalents. Their debt is reasonable. So those things really check out on the balance sheet. Let's take a look at the statement of cash flows. So the statement of cash flows did go down this year. One of the reasons is that they have a lot more receivables. So when you have more receivables, that means that your cash is out there in your supply chain, in the product that you sold, and your customer hasn't paid you for it. So in this case here, it was this significant amount of receivables. So they need to collect that and get that cash in hand. They also have more inventory, which is a good thing because I think their inventory was oversold over the last couple of years. They had trouble manufacturing product. So it's good that they have available inventory for customers to buy. All right, let's look at the stock price over the last 5 years. Over the last 5 years, the stock has gone up almost 34%, and they paid a good dividend. So you didn't break any records if you're a holder for 5 years at that appreciation rate. You did get paid a dividend over that time. Over the last 12 months, their stock price has gone down 30%. And that's not abnormal. A lot of stocks were hit pretty hard in 2022, including Tesla that was down more than 70%. So Ford was pretty much, kind of punished by the market in 2022, and their stock price really shows that. Like many stocks, Ford was oversold in 2022, and it really is showing that because in the last month here in 2023, the stock's gone up more than 22%. So it goes to show that the valuation likely is higher than the stock price it was trading at, and buyers of Ford are really showing up in 2023 and driving up the price. I determine the valuation of a company by looking at their future cash flows and discounting those future cash flows. Let's take a look at Ford. They've guided that they're going to produce $6 billion in free cash flow in 2023. So I'm using that number, and we'll monitor it each quarter as they release quarters. I'm going to go with a couple of factors. Long-term growth of 2%. I'm actually using that across all years from years 2 all through perpetual growth. I'm using a weighted average cost of capital of 10%. Nice conservative number. Based on that criteria, my model values the company at roughly $70 billion. And the market cap currently is $61.8 billion. So it offers up a good discount of 38% on Ford stock. Their balance sheet is in good shape. I'm using a previous EBITDA for the prior year and showing that it's at 1.5. And the reason for it is they had some abnormal charges in 2022. So Ford has performed really well, especially during all the supply chain issues. Their costs did go up. Their revenue grew, but their costs did go up. So they need to manage that better. The free cash flow dropped, and I explained a couple of the reasons for that. It'd be important for them to increase their cash flow going forward. And they pay a very nice dividend of 4.35 currently. In 2023, their lineup is really good. People really like their cars. And they have 2 electrical models that are very good. They've been hits, especially the Ford Lightning. I think they're going to sell a lot of units of that particular car. So they have really good growth momentum going into 2023. They've guided for the $6 billion of free cash, and they have inventory to sell. So I think Q1 and the rest of 2023 should be really good for Ford. My outlook is that Ford has the opportunity to take market share, especially from legacy competitors like the Toyotas and so forth, as well as taking on Tesla. I think this is the one rival to Tesla that can give Tesla good competition. Their electric cars are selling really well. They've been a very big hit. The stock has upside and they pay a nice dividend. So let's take Ford through the scorecard. Is it an industry I want to be in? The answer is yes. I think the automotive industry, buying at the right prices, could be a very good return on investment for me. I want to be in the industry. This company, I believe, is the best one I can invest in, dollar for dollar. Tesla is a pretty amazing company. I was a Tesla stockholder for some time, but the price of Tesla just got way too high. I believe that Ford is very well operated. They have a legacy of being a very good operating company, and I'm glad I invested in them. Their balance sheet's in good shape, less than 3 times EBITDA, and you get a discount on the stock. Therefore, I'll continue to buy Ford shares on dips and continue to build on the position I have in this company. Thank you for watching the video. I hope you found it interesting and discovered something new about Ford. Keep in mind, I'm not recommending you buy Ford stock. I'm just sharing my experience as a small investor in Ford, and I hope you enjoyed it. Good luck investing in 2023.